Okay, let's just jump right in. For years, everybody's been trying to crack the code, right? They're looking at news reports, earnings, what the Fed is doing. But what if I told you the real force moving the markets isn't any of that? What if it's something way more basic, way more human, and it's happening right there on your screen?
And that's the whole secret right there. The market is just a giant, real-time picture of human psychology. It's all of our collective fears, our greed, and our hopes, all rolled into one. And the language it uses to speak to us? It's candlesticks. You learn to read this language, and you stop guessing, and you start understanding what's really going on.
So, where do we start? Well, like with any language, we start with the alphabet. You have to think of every single candle on your chart as a confession. It's the complete, uncensored story of the battle between buyers and sellers, every decision, every flicker of fear, every ounce of confidence, all captured in one little bar. And check this out. This shows you the two emotional extremes perfectly. On the left, you've got the Marabozu. No wicks, no messing around. This candle is literally shouting at you that one side is in complete, absolute control. But on the right, you've got its polar opposite, the Doji. It opens and closes at pretty much the same price. See, where the Marabozu is a statement, the Doji is a question. It's the market hitting pause, and believe me, that pause is often a huge warning sign. Now let's talk about a candle that tells a whole action movie in just one shape, the hammer, or Tonkachi in Japanese. This isn't just a random pattern. It's the crime scene of a failed bearish attack. You see this after a downtrend, and it's a powerful signal that the market has violently rejected lower prices. And here's that battle play by play. First, bam, the attack. Sellers come in hard, pushing the price way down. They think they've won. But then, the defense. Buyers step in and they just absorb everything the sellers can throw at them. And finally, the victory. The buyers not only stop the attack, they drive the price all the way back up. That long lower wick? That's not a line. That's the shadow of a battle that the sellers just lost, big time. And guess what? The same thing works in reverse. After a big run-up, you might see a shooting star. Buyers tried to push for the moon, but the sellers just crushed them and slammed the price back down. That long upper wick is the market yelling loud and clear, nope, we are not going any higher. Okay, so if single candles are letters, what happens when we start putting them together? Well, we get words, we get sentences. And this is where we move past looking at single moments and we start reading the market's entire narrative. One of the most powerful words you can learn is the engulfing pattern, or sitsumi. Think of it like a hostile takeover. When one candle's body completely swallows the one before it, you are witnessing power change hands in real time. The old momentum is gone. A bullish engulfing after a downtrend means the buyers ate up everything the sellers had, and they're still hungry for more. Now let's go a little deeper with some ancient wisdom from the legendary 18th century rice trader Munahisa Homa. His Sakata method is so spot on about human psychology that it's just as powerful today, especially for figuring out when a trend is about to die. First step, we have Sanzan, or the three mountains, what we now call a triple top. This isn't just a chart pattern, it's the biography of a dying trend. Buyers try once, twice, 3 times to push to new highs, and each time they fail. You can almost feel their confidence draining away. By that third peak, the energy is just gone. The market has confessed its limit. And the mirror image is Sansen, the 3 rivers, or a triple bottom. Here it's the sellers who try 3 times to push lower, and they fail every single time. By that third attempt, they're exhausted. They give up. This is the story of their surrender. And while all that's happening, you can bet the smart money has been quietly buying up everything they're selling. Okay, listen up, because this might be the most important part of this whole thing. Knowing the letters and the words is great, but understanding the grammar, the context, that's what makes all the difference. A pattern by itself is just a random shape. It's meaningless until you understand where and why it appeared. So here's the formula you need to burn into your brain. Pattern plus context equals a high probability setup. For instance, a triple bottom starts to form. That's your context. It tells you the big picture is starting to favor the buyers. Then you get a huge bullish engulfing candle right at that support level. That's your confirmation. The context tells you where to look. The candle tells you when to pull the trigger. That combination, that's a powerful signal. So let's talk about one of the most misunderstood patterns out there, the inside bar, or harami. It's just a small candle that's completely contained within the range of the one before it. Now, most people see this and they immediately think, oh, the trend's running out of gas. But is it really weakness? Or could it actually be a sign of coiled up strength? And the answer, of course, is it depends. It's all about context. If you're in a choppy, sideways market, yeah, an inside bar is probably just more indecision. But what if you see it right after a massive breakout from a long consolidation? That little bar isn't weakness, it's digestion. It's the market taking a quick breath before the next explosive move. One pattern, two totally different stories.
Now, if you want to see what pure, raw strength looks like, this is it. The three soldiers, or sanpei. We're talking three strong, bullish candles in a row, each one closing higher than the last. This isn't random. This is conviction building on conviction. This is what it looks like when the big institutions are buying with both hands and they don't care who sees them.
All right, so knowing all this is great, but theory doesn't pay the bills, right? It's completely useless if you can't act on it with ice-cold discipline. So let's talk about how to turn these psychological insights into precise professional action. Rule number one, and this is absolutely non-negotiable. The higher time frame gives you clarity. Before you even dream of looking at a 5-minute chart, you have to know what's happening on the 30-minute or the hourly. That's where you see the river, the main institutional flow. Your job is to swim with that current, not try to fight it.
So here's the game plan, step by step. 1. Confirm. You have to wait for that candle to close. Period. The close is the market's final verdict. 2. Enter. As soon as that candle closes, you're in. 3. Protect. Your stop loss doesn't go where you feel safe. It goes just beyond the structural reason for the trade. And 4. Target. You aim for the next logical place the market is likely to go. This turns trading from a gamble into a process. And this all comes down to the hardest skill of all, patience. I've seen unbelievably smart analysts lose everything because they couldn't just wait. They'd see the perfect setup forming and jump the gun. Remember, the entry isn't just a price, it's a specific moment in time. Your entire job is to wait for that one perfect moment and then act without a shred of hesitation.
So you might be wondering, with all the high-frequency trading, the algorithms, and the 24/7 news cycle, how does this centuries-old way of looking at markets still work? Well, the answer is actually incredibly simple.
It's because technology changes, but human nature is constant. Algos can change the speed of the game, for sure, but they can't change the underlying emotions that drive it. Fear today is the exact same emotion as fear 200 years ago. Greed doesn't change. Hope and panic are timeless. The candlestick chart is just a mirror, and what it's reflecting is us.
So if you take one thing away from this, let it be this shift in your mindset. Stop trying to be a fortune teller. Stop trying to force your opinion on the market. Your job is to become an expert translator of human psychology, to read the story, align yourself with the dominant emotion, and just let the market do the heavy lifting. So the next time you pull up your charts, I want you to see them differently. You're not looking at lines and colors on a screen. You're watching a living, breathing story of human psychology unfold, a story of fear, greed, and hope, revealing itself one candle at a time. And the only question that matters is, what is it telling you right now?